Alright guys, in this video we are covering why you should not just rely on one time frame and actually introduce top-down analysis. So by the title of this video, you can see it's saying that there is a best time frame to trade on. But in this video, I'm going to cover why there is no such thing as a best time frame and why you should generally just be doing top-down analysis and placing trades on a time frame that's most comfortable to how often you're on the charts all day, basically. I want to break down why, regardless of even if you're on the 5-minute chart, you're typically placing trades there, you should still be aware of the 4-hour, the 1-hour, and the daily chart, etc. So here on the 5-minute chart, let's just do a basic hindsight example. So you could come here, you're on the 5-minute chart, and you're just looking at this time frame. You mark up this level as the gap fill you want to trade. You're betting on the upside because price basically came down, it broke out, and retests here. This used to be support. This used to be resistance, and now it's acting as support again. So you're bullish on the market, and it's really not that bad of a trade idea. If you're just looking at the 5-minute time frame, this actually looks like a decent idea, right? So you're placing the trade, you're targeting the gap fill right up here, and let's see how this plays out. Okay, got completely stopped out. The reason why you should not just be using one time frame, regardless of any trading strategy video that's been made or any chart pattern that you see, any indicator that you're watching, you should always still look at the higher time frames to actually create a trading plan. So let's zoom out to the 1-hour chart, for instance, and actually see what we could have noticed before entering this trade that would have helped us actually manage our risk. All right, so zooming out, we can go on the 1-hour chart. And we can see that this here was a level of resistance the whole time. And because we're on the 5-minute chart, we had no idea that this high was actually a strong level to watch out for. In general, when you're on the higher time frames, I just recommend that you mark out your levels, you look at whatever indicators you're looking at, and be aware of the higher time frame trend and be aware of the important levels that have formed. It should be obvious that the higher time frame levels that you're marking out are much more relevant than the lower time frame levels like these ones here, although they still play out the same, and really any indicator technically works on any time frame. The higher the time frame you're on, the more relevant of the data it's going to be because there's more data in each candle the higher the time frame you go. If you just look at this example, you can see that price actually reacted strongly to that 1-hour level that we marked out. While this trade, as I said, was actually a pretty decent idea based on the price action formed above this zone and the gap fill that was clearly there, you could have been more mindful of this higher time frame level and how price is clearly reacting strongly to it during the trade. So maybe as you saw this was happening, you could have taken more profits at this level and properly managed your risk to avoid something completely unexpected happening because you're actually aware that the price is likely to react here. It doesn't even have to just be the 1-hour chart. I mean, you can go as high as the weekly or even the monthly to be aware of what's happening in general, right? Like, it's totally relevant, even if you're a scalper, in my opinion, that Apple on the weekly chart is literally making lower highs. And as you're placing this trade on the 5-minute time frame, you probably shouldn't be the most biased to the upside when something this significant is happening, regardless of all the fundamentals too. Price finding significant high time frame resistance is definitely more relevant than some sort of chart pattern breakout or any indicator on the 5-minute time, for example. I just wanted to make this video because I know that a lot of traders still don't have this understanding really dialed. So I hope this makes it really clear for you. To elaborate more on timeframes, I always say that the lower the time frame you go and the lower the time frames you're generally trading, the more unhealthy it typically is. One of the biggest downfalls of traders is over trading and using those lower time frames too literally. I hope this video was helpful, guys. I'm going to link some stuff in the descriptions as we have a blog post and a bunch of other guides on this. Join our Discord, the link is down below as well. And if you want to get access to our premium or free indicators, I'll leave the links down there as well. All right, so hope this was helpful, guys. We'll see you in the next video.